Hello everyone, welcome to CryptoPi. In today's video, I want to talk about Bitcoin's 4-year cycle, the reality of the midterm year. If you like the analysis, then do hit the subscribe button and engage with the channel. All right, so what do we see here? It's the Bitcoin in dollar pair, and the green line is the 200-week moving average. What I want to show today is an indicator which is available on TradingView. It's called Andean Oscillator. It is editor's pick. If you click on the notepad icon, you can get the description of what the indicator does. I want to apply this indicator on the Bitcoin USDT pair on the weekly time frame. Now, at the first glance, it's all pretty messy and doesn't tell us much about what are we looking at. But like we discussed in previous videos, what helps us is our accumulation and distribution lines. So accumulation lines are the ones where after the price crosses the accumulation line, Bitcoin usually is very close to the bottom and starts a new cycle. For the distribution lines, when Bitcoin price crosses the distribution line, then we can say that the top is already in, and then the price is going to be taking a downturn. That is what has been happening since October last year. We discussed this in multiple videos that the week of 23rd of October, so here 20th October, its price has already marked one of its top, then that will be the cycle high, and price won't be crossing that anytime soon. And that is what we are observing right now. We did had a short rally last week, but it didn't last that long. Price went up until 97,000, and then we already see the price going down back to its original trend for midterm year. Coming back to Andean Oscillator, I don't know what is the right pronunciation, but I guess everyone has their own way of pronouncing it. Some people say Andean, someone says Andean, but this is the oscillator. All right. So what do I want to show here? First, what do we see here in this oscillator? Let's bring it full screen, and in the settings, you will see that there is a length, which is the look back period, which is 50, and signal length, which is computing basically a moving average, and the look back period is 9. The green one is the bullish component, and the red one is the bearish component, and orange is the signal line. So just by looking at it, you can see that whenever the green line, bullish component, is above the orange line and also above the bearish component, we are in uptrend. And when bearish component is above the orange line and the bullish component, or the signal line and the bullish component, then we are in the downtrend. It's pretty simple. Whenever we see the bullish component rising from 0, we can see some kind of pullback in the price action. And as soon as it drops, basically it means that the pullback was over and the price is going back to its original trend, in this case, the downtrend. Now, this is the first cycle. We are ignoring this one because the price action was pretty new. And probably the indicator was working because there was enough price action for the indicator to work. There were already 50 weeks here. So here, the bullish component, you can see that price was rising. Bullish component was above the signal and it was above the bearish component. And as soon as the bullish component crossed under the signal and crossed under the bearish component, we saw the first bear market, the proper bear market of Bitcoin. The bear market got confirmed when the bearish component crossed over the signal line. And it went on up until the bearish component crossed under the signal line. However, this does not mean this particular cross under does not in any way indicate that bear market was over or bull market had begun, because the bullish component still under the bearish component as well as the signal. So we can say that the first signal of the bull market to start comes only when bearish component crosses under the bullish component. So the red line crosses below the green line, and it is confirmed when the green line crosses over the orange line. The bullish component crosses over the orange line. So that's the basis of this whole analysis. Now, and this happened in the first cycle, and we saw that this was a pretty long accumulation phase for quite a good number of weeks, a couple of weeks, and then another rally began. Over here in the cycle of 2013-2014, we see that in this distribution line, which has been marked, as soon as the price crossed, we saw the drop in the bullish component. It's very clear that the bearish component had been rising, and now it took over the bullish component. Though we did not have a confirmation of bear market, it came very close, very near to the signal to give the confirmation. However, the confirmation of the bear market happened only in September over here. Then the bear market did not last very long. It was still bear market territory when the price crossed the accumulation line, and the bear market, the bearish component, lost its strength through the signal line after price crossed accumulation. And we can see the next bull run started when the bullish component gained its strength against the bearish component. This was the first indication over here on 26th October 2015, and after that, this was the confirmation in December 2015 that a new bull market has begun. So this too, just looking at the distribution line, accumulation line, and the strength of bullish and bearish components, help us enough to navigate what will the trend be for Bitcoin in the midterm year. All of these years has been midterm year. 2017-2018 bear market was midterm year. This was a midterm year. If we open up the text which we wrote in the last video, you can see midterm year 2014-2018, which was first one, which was here 2014. This was the midterm year 2018, a midterm year 2022, and now we are in 2026, which is a midterm year. For people who are not aware with the term midterm year, it's basically related to elections in US. The year when the elections happens, it's same as the halving years. And we have post-halving year, pre-election year, and the one which is going on right now is the midterm year. Over here, all of this bullish component, when they crossed above, when they crossed below the bearish component, so when the bearish component gained strength against the bullish component, firstly, it was in midterm year. Secondly, the bullish component did not gain the strength back until the price had crossed the accumulation line. We do get some rallies over here when the bullish component gains some strength, but it is far away from the bearish component that it in no way that the price was going to cross and start a new rally. So this idea of super cycle did not work out here. It did not work out here, and it's pretty likely that it won't work out in this cycle as well. What do we have here? The bearish component was losing strength since 2022. It lost its strength against the signal line, then it lost strength against the bullish component in April. That's when the bull market began, the first year of the bull market, if you want to say so. And you can see there were always these drawdowns, the pullbacks in the price whenever the bullish component gained strength. But it wasn't enough for the bearish component to take over the bullish component. We got that first indication after price crossed the distribution line, which was in October. Here in November was finally when bullish component dropped to 0. If you look the value over here for November, the price is 0. The bearish component that is here, bearish component which gained momentum after October, crossed the signal line in December, and the bullish component is nowhere to be found. It's so far away. On this crossover, bearish component's crossover, the value of bearish component is 13,800 and bullish component 770. That's a huge difference. It's just incredible. It's approximately 2,000 times if you round up the numbers. Now what would we see according to previous pattern? The bullish component will try to stay like this, and at one point we cross under the signal line, and then at some point it will drop, and the bullish component will gain its strength against the bearish component. And when it will cross over the signal line, that's when we can say with confirmation that we are in the next bull market. Now why am I so confident about this indicator here? Because the reason is the time frame. We are on a weekly time frame, and the higher the time frame, the higher is the confidence of the trend. Here the trend was bullish. Confirmation happened in October 2023 that we are in a new bull market, and we saw it since October 2023. It had this break of structure over here. Going back to a bit of the order block theory, this was the break of structure. You can see here in October 2023, it aligns so well that we had the bullish component giving us confirmation of the bull market, price action giving us confirmation of the break of structure, order block, bullish order block forming here. We have all the three confidences, all the three analysis going hand in hand. For the bear market, we have not yet got any confirmation about break of structure. This would be the break of structure that will give us the confirmation. We do have confirmation from the bullish component, and we do have the confirmation from the distribution line. Price has crossed the distribution line, and the other signal is that it is a midterm year. We have never seen Bitcoin make a bull run or make a new high in the midterm year. So again, it is all guessing and prediction and estimation. So no one can be sure what happens tomorrow with Bitcoin's price. But so far, by looking at historical patterns, it seems to me that price has quite some way to go downwards before the next bull run starts. If you like the analysis, then do hit the subscribe button. I will see you in the next one. Bye-bye.